I'm going back actually to something we haven't discussed.
David, the yield has grown so dramatically. I get you.
Actually changing the subject a bit because the question becomes when you're going to have potentially 3 key platforms, namely Disney, of course, Netflix, which we'll get to in a moment.
You're going to Disney?
No, Disney Plus.
No,
Netflix,
but I'm saying Disney stock has been
and then the new combination that a little more than a year from now perhaps will actually be in existence of Warner Media and Discovery. You've got 3 enormous potential platforms, right? But what about some of the other streamers out there? You know, we always put Apple TV up, Jim, for example. Right. Apple's been in this business now since November of 19. They've had a couple of fun shows. I love Ted Lasso. A lot of people did. Other people enjoyed the morning show. But they've got nothing. Let's be honest.
David,
what are they is the question, and what will they be? Because at some point, if you are Apple or even Amazon and you really want to compete here and it's important to you, and Apple does it, I guess, to support the sale of its devices in some way, that is viewed as a positive, despite the fact that they often just sell themselves. You're either in or not. And, you know, Apple,
come
all
on.
the reporting...
Have you ever heard of a moving target?
...that I have done through the years, Apple talked to CBS years ago, before they even got back together with Viacom. Apple talked to Jeff Bewkes and Time Warner. You know, Eddie Q would get these meetings, and then they bring Tim Cook, and then he's like, oh, what am I doing here? No interest. Discovery, Apple talked to, or at least there was an outreach. And then, again, kind of the same story of Tim Cook comes to dinner and, with Malone and Zaslav, and they're like, well, what are we here to talk about? So they've never pulled the trigger.
But then,
never,
David,
never, ever, and they probably won't. And my question is to you, as somebody who supports Apple, but also this is consuming some capital. It's taken up space. What's the plan?
Well, the plan is to develop over time the best product possible.
Do you know how long it will take for them? It could take a very long time, despite all the money they have, to develop that kind of library of content.
So what is just to do? Buy MGM?
No.
What are you saying?
I don't know. Do you buy Viacom? Yeah, do you? What do you try to do if you're Apple? Or do you just continue to sort of move along? Or do your shareholders say, why bother?
Nothing.
Give us the money.
Look, David, this morning Barclays says the service revenue stream is decelerating. Well, how about you have an app store, David? Now, of course, obviously there's a lawsuit, where they generate all this content. You don't have to do anything. It's like YouTube. You don't have to do anything.
Right, you don't have to do anything. So what is Apple TV?
Well, it's what they want it to be over time. They don't feel the pressure that so many of the moguls feel.
And I think you're right.
They don't feel the pressure.
I do wonder, given that we are now in the end stage of consolidation in terms of the creation of these direct-to-consumer platforms, and they are going to be what TV is all about for the future and the present. Do you run out of your ability to use acquisitions to actually create a robust offering?
They could create the modern-day United Artists.
Maybe. If you're Amazon, you've got to be thinking about the same thing. Now, Amazon does it to support Prime.
Right.
Obviously, both these companies are awash in cash. There's always going to be an antitrust question to some extent. But does Amazon consider, all right, maybe it's time to buy not just MGM, but to Viacom or do something else like that? By the way, I do hear that if Viacom were to be presented with an actual possibility of something leading to a deal, they'll listen. There's not as though their control shareholders not interested in listening. Doesn't mean that anything's going to happen or that anything is happening right now. But it's interesting. And by the way, just look what they're up against. You got Jeffries this morning, guys, on Netflix. $620 price target. They initiate coverage.
That was an interesting piece.
Despite using popular third-party content to build a subscriber base and achieve economies of scale, Netflix is now in a position to self-fund an original content offering that rivals the entire TV movie industry combined. Content owners are pulling IP left and right. Remember, of course, they are. Right. So they're all getting siloed, forcing consumers to choose between countless direct-to-consumer offerings, while Netflix puts $17 billion a year into content.
But the scale advantage there is $200 million. Well, how many subscribers
does who have?
Plus it?
30?
Half a billion.
Same. Oh, yeah, but they've got but nobody's paying for
David, if they have shows. They are not a company that is rushed into anything.
But maybe you got to rush sometime.
Oh, David wants one of these, like,
maybe not.
Sun. Where do they go? The mogul. They go to Sun
Valley.
Yeah, Sun Valley.
Well, maybe you're right. You very well might be.
Yeah,
I think it's worth pointing out anyway.
I ain't going to play Sun Valley. Carl, we can sit here and debate that they have to go buy one of these companies. You know what they're thinking?
They're not going to. They're not going to.
What they think
passed on everything.
What they think is service revenue stream is as big as a Fortune 50 company, and we're going to develop it over time. But we are not going to introduce anything that we think is not perfect. And so, therefore, I mean, you can say that Apple stock should go down on this, but Apple stock's not been that great. But
it doesn't move on this. This is nothing.
That's my point.
But it is nothing. And should it be something?
Shepard Smith here. Thanks for watching CNBC on YouTube.